I'm here with Shayne Nelson, Standard Chartered's Regional CEO for the Middle East and North Africa. Shayne, thanks for joining me. Obviously, anniversary of the collapse of Lehman Brothers, very much fresh on everyone's minds. How have the region's economies changed over the past 12 months, and how has that affected the banking sector within the Gulf?
Well, I think it would have been silly to say that the Gulf region wasn't going to be affected by what was the world's worst financial crisis since the Great Depression. So we were impacted in this region, and I think certainly there's been a big increase of unemployment, a lot of job losses throughout the region, with a few exceptions in economies. So I think we have been affected. Certainly some of the effect has been a withdrawal of liquidity from the region. As the West has had problems, they've pulled liquidity and risk appetite out of the region, which has left some countries quite short on liquidity. And for example, the UAE was about 110 billion dirhams short between its advance and its deposit ratio at the end of December. Now, that's narrowed significantly, and it's down to about 40 billion now, but it's still a gap out there at the moment. So we have seen quite an impact, I think, on the region.
How successful do you think regional governments have been in their interventions?
I think the region's governments have done a good job in intervening during the period. Obviously, there's lots of different governments across the Gulf, but I think as a whole, they've acted very proactively, especially with liquidity and capital for banks where necessary. So I think from that perspective, that they'd get a big tick in my book, that's for sure.
In terms of liquidity and pumping liquidity into the banking system, the money, say to take the UAE for example, the money is certainly there at the moment, but there still seems to be a bit of a lag, a bit perhaps getting out into the wider economy. Why is this? Well,
I think there's two issues here. There's liquidity and there's the type of liquidity. One of the regulations that the banks operate here is an advanced deposit ratio of 100%. And many of the banks in the UAE were caught out with a lot of those funds flowed back offshore. So that they had high advanced deposit ratios. So basically they have to work those ratios down. And they can do it by probably a few ways. They can increase the deposits that they hold, they can reduce lending, or they can do a combination of both. But we have had a situation where banks have not been able to meet those requirements. So they haven't got the capacity to go out there and lend long term whilst they've got those constraints on them. The other issue I'd say is there's a difference between liquidity and sticky liquidity. Now, when you're doing your advanced deposit ratios, it's the type of liquidity. So the interbank market's got lots of liquidity. But the amount of sticky liquidity that we can then lend has been significantly reduced.
Speaking of, say, investments and a return of interest to the region, a number of funds recently launched and Sukuk have attracted a lot of interest, a few being oversubscribed quite substantially. Do you think that this marks a shift in how the region's viewed?
Yeah, well, I certainly think there's been a return of risk appetite. If you look at, and we were involved in the Russell Khaimah bond, the TIC bond, the Tucker bond, very well accepted by the investment community, not only within this region, but in Asia and in Europe and the Americas. So there is demand growing for good quality credits out there at the moment, and we are seeing strong interest from investors overseas to invest here. And that's not only good for the companies that are raising those funds, but it's also good for the liquidity in the economy of the UAE, for example.
Okay, so people's risk appetite is growing, and perhaps there's a perception that things are quietening down.
I think that's correct. I think people are seeing that there's a stabilisation across the Gulf now. I think people are getting a lot more confident in the long-term prospects for the Gulf, and people's risk appetite has changed.
How do you see the Gulf economies performing over the medium to long term? Obviously, analysts have said Dubai is still in for a bit more short-term difficulties, but across the region, how do you see it?
I think certainly, I think we discussed this the other day. I mean, Dubai is certainly going to have some short-term pain, and property is the obvious big issue here at the moment, and there's a big overhang. But I think even in Dubai, if you look at it from the medium term, the increase in competitiveness of Dubai, because rents have dropped significantly, it'll help its competitive position going forward. So actually, whilst there's short-term pain, even for a place like Dubai, I think medium to long term, that's going to be good. When you've got commercial office rents, residential, retail, all dropping, that'll be good for the region over the long term. And let's face it, at one stage, the rents have got to a stage where Dubai was losing its competitive edge. So I think now we're having a retracement of that, so that'll be good. If I look to 2010, I mean, our forecasts are most of the region will have between 2 and 3% growth, with the exception of Qatar. Qatar, our view is it'd be 9.5%. So, and largely because of the effect of bringing on new LNG trains. So Qatar is going to have they'll have a stunning 2009 and an excellent 2010. But the rest of the region will still grow between 2 and 3% for the Gulf countries. So I think that'll be shown as pretty good growth against the rest of the world. Our prediction this year is that there won't be a recession in the Gulf across any of the countries. I think Kuwait we're predicting at about 0, but besides that, everywhere else will be slightly positive or quite positive when you look at someone like Qatar.
And finally, if we look at Islamic banking, it's a sector that's taken a while to perhaps gain the traction that it could have had in the region. Going forward, do you see it becoming a more attractive prospect, perhaps, given what's happened with conventional banking? Certainly,
we've seen phenomenal growth in Islamic banking at Standard Chartered for probably the last 4 years. It's been quite phenomenal. And we predict more and more that companies will convert to Sharia compliant structures. Certainly, if you've seen a big shift in places like Saudi, very few people take consumer loans on anything but a Sharia compliant basis now. They just about don't offer conventional banking. And I think we'll see a shift more and more to Islamic products rather than conventional. Well, one of the things about Islamic is it's a bigger pool of finance, because conventional investors will invest, for example, in a sukuk. Yep. But an Islamic investor won't invest in a conventional bond. So you actually have a bigger pool of liquidity available for sukuks in some regards than you do for bonds. So we do see a shift of people wanting more Sharia compliant products, not only in consumer banking but also in wholesale banking.
Okay, excellent. Shayne, thank you very much for joining us.
Thank you very much.